Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital, FinTwit's first ever morning show. Excited to get things underway. Let's introduce the panel here, guys, starting with Coach Dipka. Coach, what's going on?
Morning, guys. Happy to be here. Thanks for having me on.
Money Mander, how you doing?
Good morning, Alejandro. I'm juiced for this. I'm so excited to finally go live with it.
Diamond, how you doing, man?
Good morning, guys. Inaugural show. Couldn't be more excited. Let's get after it.
We've got Stock Sniper with us.
Good morning, guys. Really excited for this first show. God bless America.
We got Ramsey Rippers.
God bless America is right. Let's go.
And last but not least, Mo Mamba.
Good morning, guys. First ever on fintwit. Let's go. Excited.
This is the real deal, guys. The first ever. We came up with this idea a couple months ago. We've been working through it in the Discord, practicing, going live for the members, but it's finally time to show the people what we're doing. So this is actually a really good time to do our first episode, given the market action that we saw yesterday with CPI coming in at 7.7%, a cool number that sent the markets higher. It seemed yesterday, guys, like investors were sort of piling into equities, maybe gaining a bit more exposure with fears that the bottom may be in. And the reason is that inflation may have peaked. So now we're left with a massive historic rally, and we're going to see if we can get some follow through headed into today. But to talk more about the Fed, to talk more about what we saw yesterday, we're going to bring on our macro experts, Noah and Money Mander. What do you guys got for us?
Yeah, so, yesterday was really just a rally sparked by the low CPI number, which, by the way, we did point out. I had a hot take in the Discord that we would see below 8%. Lo and behold, we get a 7.7% print. Just under 8% expectations. Core CPI, which is what the Fed really targets, came in at 6.3%, under 6.7% expected. And so I think what we saw yesterday was really a rally, like Alejandro said. If peak inflation is in and the Fed is eventually going to pivot, I want to be involved in stocks, right? I don't want to be somebody who missed the bottom, because there is a risk with being out of the market, right? If that were to be the case. And so we saw one of the biggest rallies that we've seen in a couple of years. The QQQ was up 7.3%. SPY closed the day 5.5% higher, and the Dow was up 3.66%. The thing about this CPI print that I see a lot of people talking about is that, yes, it came in below expectations, but 7.7 is still really high, right? The Fed targets at 2%. We're still 285%, above that Fed target. But we've really been seeing a continuation in this downtrend since the peak, right? Since we had peak inflation back in, June at 9.1%. Ryan, if you could throw up that chart, that'd be perfect. Because we've really just seen a steady decline. There we go, 9.1%, 8.5%. So just a steady decline in the inflation prints. And so that leads some to believe, okay, peak inflation has already hit. The Fed's tightening is working. And so eventually here, they should be looking at making a pivot. And that's exactly what the markets are pricing in, right? The market is now pricing in about an 85.4% chance of a 50 basis point interest rate hike coming in at the December meeting. That's up from just a 56.8% chance Wednesday before the CPI print. And so people are betting, okay, the Fed's been raising by 75. People are giving it a higher likelihood, now that we've seen inflation continue to come down, that they're going to slow that size and actually only do a 50 basis point interest rate hike in December. And so it'll definitely be interesting to see, what the Fed ultimately decides. We have another CPI print literally 2 days before their next meeting. And so that'll be super interesting to see how that's going to sort of affect their game plan. Like I mentioned, stocks rallied aggressively on this news, and we see a lot of people saying, the bottom is in. But it's really interesting when you look at the type of price action that you get during a bear market, right? And so during the 2002 dot-com bubble, the NASDAQ had 14 up days of 6% or more, which is what we had yesterday at 7.3%. 14, right? Every single time that we got one of those 6% up days, if you had told yourself the bottom is in, you would have been wrong every single time. And so I think I would just urge caution, even though things do look good and the story does make sense, just be careful because the bottom ultimately may not be in just yet.
Yeah, on that exact point. I mean, bear market rallies happen and they're always aggressive like this when they do, because as you mentioned, there's so much cash sitting on the sideline. People get this FOMO. They want to be in stocks. Like when you're sitting there in an all cash port and you see these massive moves up, you want to get involved. And so when they come along like this, they're always aggressive like that. And it leads people to believe, now people are saying, oh my God, I might have missed bottom. Now you're going to have more buying. And that's where these rallies really stem. But like you mentioned, in the dot-com bubble, we saw 7 rallies of 20% or higher. And that's just about where we're at off of lows, is about 20% up. None of those 7 marked the bottom yet. So, these things take time to play out. Here's my thing is that the FOMC is tasked with 2 objectives, right? Maximum employment and price stability. And so while, I wouldn't even really consider this a pivot, right? Lowering rates was part of the plan. To me, a pivot is the economy is so crunched right now. We're moving away from QT and we're going to start quantitative easing again. That to me is a full pivot. That is a change of narrative. A drop of 25 basis points was part of the plan from the start. I'm not looking at that as a legitimate, pivot, right? We're still 3.85 times higher than the target rate, as you mentioned. And so, the thing is with those 2 standards they're given, right? Price stability and maximum employment. Employment hasn't budged really off of lows. I think it's at like 3.7% right now, right? So if employment is fine, they're left with one thing, and that's price stability. So until you get a crossroad between the two, I don't really see them going to stop rate hikes, right? They come down by 25 basis points. But the thing I was going to say, and for like my whole segment here, is less sucky does not equal good. And so while it's less sucky that they're only going to hike by 50 instead of 75, that doesn't make it good. They're still hiking rates. While inflation's down to 7.7 versus 9.1, it's still almost quadruple the target rate. Less sucky is not good here. And so, we're trading both sides, but I'm not personally marrying any longs. I don't think we're really near this bottom yet, especially as we get into this next earnings season, as all these companies just guided down for next quarter. It's already like the earnings window we just saw is like out the window already, because CPI came in a little bit lighter than the quadruple expectation we saw, right? Every company guided down saying revenues are not going to be there next quarter. We're still feeling this crunch in the economy as your real wages and stuff are still down with this sticky inflation. So like I said, all that being said, obviously trade both sides. These rallies are so much fun to trade to the upside because they're so aggressive and fast, but I'm not at all calling bottom in here yet. We'll move right onto that into the debt market real quick. Obviously, with this massive rally, you're going to see a pullback in yields. The 10-year is actually down 30 basis points from that high pre-CPI print. So down to like 3.8%, I think, this morning, down from like 4.1 and down from 4.33 highs there. So down 50 basis points from peak. Pretty aggressive move. The dollar's down about 5% from that peak. Really getting that macro confidence for this rally. We'll see how far it can really go, right? You're having the VIX down. The VIX is trading almost at like 2021 levels here. We're in low 20s, which is absolutely crazy to me, but you are getting this confidence throughout all your indicators. Yields down, dollar down, VIX down. Gold's rallying off the dollar weakness here. And I guess it's kind of futile now to even talk about it because the rally's on. But the 210 is still at lows not seen since 1981. And so, the debt market, while yields are all down collectively, that inversion there is still signaling a lot of uncertainty in the future. So we'll really see here. But
the last point I'll make on the Fed front is that we've really got 3 pivots to watch out for, right? We have the decrease in the size of these rate hikes, right? Going from 75 to 50 to 25 basis points. That's pivot number 1. And they already talked about that coming as early as December, right? So that's really basically on the table now. We've got them stopping, right, raising rates, which probably comes at some point in 2023. And then we've got them, like Mander said, actually bringing rates down, right, which could take anywhere from 6 months to a year to 18 months, right? So we're definitely not out of the woods yet. 1 out of 3. It's good to see, but like I said, we've got a long way to go. So just keep that in mind.
All right, appreciate you guys. I'm going to go ahead and share my screen now, and let's move over to the system. So guys, 3 really solid trades that you could have taken this week using the system, and that was the buy signal from Monday. We'll call that trade A. The sell signal prior to yesterday, so Wednesday, was trade B, the gap up. We were technically in buy territory, and it was, all good to trade long, okay? So it's important to understand, and the lesson to be learned from this week, anytime we are headed into important economic data or any time that we are headed into a volatility event, it is always smartest to be all cash. Now, I'm sure yesterday you saw a lot of people who were positioned long going into the CPI print who made a lot of money, and they, get to hoo-ha and, post their gains, and it's all fun and dandy. But at the end of the day, it was gambling. So in hindsight, we can very easily look back and say, you know what, we should have gotten long and we would have made so much money. Not how it works if you're looking to properly manage risk, right, guys? So after Wednesday, 40 points. So that's a pretty nice trade there when we broke down below this 50 SMA on the 30-minute chart. But we knew at the end of the day that we wanted to be back in cash. And the reason is because we knew we had that volatility event around the corner. So a couple important things to note here. This is, of course, the 30-minute chart. Let's take a look at the hourly chart. We always like to say that we want the two charts to be telling the same story. So when we got that sell signal on Wednesday afternoon, why did it get follow through? Why did it end up being a good trade? Well, the hourly was telling the same story, breaking down below the 50 SMA, and we were getting that bearish cross, right? Now, both the hourly chart and the 30-minute chart are in buy territory, trading above the 50 SMA and 10 SMA on both the time frames. So that is our sign that we could trade long. Yesterday, you could have gone long at the open like I did. Made a successful trade there for about 50 points. The next best trade was on this pullback, guys. When you see the 10 SMA creeping up, and that, of course, after the first test of the 10 SMA, and this is a rule I like to use, after the first test of the 10 SMA, after either a buy signal or sell signal, oftentimes you'll see it serve as support or resistance. So keep that in mind moving forward because it worked perfectly in this example. So what to look out for today? Bullish as long as we're trading above the 50 SMA. We'll likely see some profit taking in the coming days, guys. Of course, massive rally. So, if we start to dip a little bit, you may see some selling pressure. But I do expect the dip to get bought up, and the reason is we're trading above this 50 SMA, so I am bullish moving forward until we break down below the 50 SMA and until we get that next sell signal. All right, so that's enough about the system. Let's move over to Coach Dipka, who's going to give us Dipka certified levels of the day.
Yeah, good morning, guys. Good morning. We're going to do a segment here called 60-second Dipka certified levels. Our producer Ryan's going to pull up the chart I sent him, and we're going to set the timer right now for 60 seconds. And I have 5 levels for you guys. The idea here is, hey, you rolled out of bed late. You don't have your levels charted, but that's okay because I got you covered, all right? So we're going to start with our big resistance, right? And I really only have one resistance I want to focus on. That's going to be that 398.12 to 398.48 level you see up top. Those are double fibs, right? And one is the 38.2, one of my favorite. So I'm going to be looking for a slight rejection there. I don't want to fade an all-day uptrend, right? We had a massive squeeze yesterday, but we can't ignore that we are getting into overextended territory. So we have to look for points that we think could reject. I know a lot of people are focused on that 400, and I feel like it has a magnet, but I actually expect a rejection here first. And that 400 level is actually pretty tricky. I don't know if I'm going to play it personally. Now, the big question today is where can I look to get long? My favorite level for today is 392.51. 392.51 fib is, it was a solid small resistance yesterday. So I want to see that retest and come back to that 392.51. And if you look left on the chart there, you'll see we had a little high at 392. I'll also play that. So that fib at 391.68 to 392.51 is going to be my top watch to long. So again, 392.51 to 392, favorite long, favorite short at 398.48 to 398.12. Glad we finished in 60 seconds. I'm excited for today. And I'm going to pass it back to Alejandro here, guys. Let's have a great day.
All right, thank you, Coach. Now let's go over to Mo Mamba market analysis presented by Under Armour. Thanks for showing up in a t-shirt today, Mo. while everybody else decided to wear button downs.
Always. All right, let's get into the analysis here. Daily analysis, big level here. If you guys remember all my analysis when we were up here in this daily supply region, this 390 to 388.5, this was what I was watching. If price action was able to close above, I like to move up into this 395. Well, rejected, came back down, formed a higher low. Now we're up here at this 395 level. That's the big level to watch for me. I want to see us come down here intraday, confirm support, and then close above this level for a move up to 401.5. That is my next key level, 401.5. If we fail to hold this level, so we're gapping up today, we're more than likely going to open above this 395. If we end up, bring this in here real quick. If we end up gapping up and then coming down, failing to hold this as support, closing below, I like to move back down to this 390, to this what was once supply, now demand. Test this level, confirm support, and we'll look to come back through this level. Otherwise, I got to watch this level. This is my big main level. See if we hold above or see if we close below. Now, of course, macro, I am still bearish. I don't think the low is in. We'll go day by day on this, but this might be a case if the market keeps running here to eventually come and test this huge trend line we got going, right? We can probably go out into the weekly and see a cleaner look on this trend line. So that's a nice trend line. This is the weekly time frame, but we might eventually end up coming up and testing this trend line. And we do have a gap fill on the daily. If you look down at 408.60, not that we'll get there. Again, we got to take it day by day. I don't think the market is going to pull, just green every day. We'll chop around. We'll see some movement, but eventually we might come up and test this trend line. I'll invalidate this test over here if we break this trend right here. You see how we formed a higher low, closed above it on the day before CPI, and then you got this run up. If we end up coming through this trend line and close it, that's it. I'm not giving any hope for this trend line to be tested as long as we're below this trend line. Once we break, I believe this will be the trigger to come down and make these new lows. But we'll see. Again, day by day, we'll go with the price action, what the candles are giving us. But 395 is my main level for further upside, or come back down and test this 390 level. All right, thanks.
Mo, where's that upper trend line sitting at? Just so we kind of get an idea of how far.
Well, right now you could.
I know depending on when we get there, right? But in general,
413 right now would be your peak. And I would say down to like 406.30. 406.
Right, so we still got like 150 points of room there, guys. Almost 200 points of room there if we are going to push higher based on Mo's analysis. So that'll be something that we'll be looking out for. And then over that trend line, I guess that could get really fun because, we could anticipate that. Imagine we're sitting up there by next CPI. We get another cool CPI print breaking out over that trend line. That would be something. All right. Let's move over to Snipes now, guys. For Snipes' micro minute, he's going to run through some levels really quickly.
What's up, guys? I got 4 micro levels for you today. The first level that I'm watching is 396.17. We're not far off from here. I'm looking at this as a base support for where we're currently sitting. The level above here that I got is 397.40. Over here, I'm looking at this as a current overhead resistance. Under here, we got 394.69. I'm looking at this as a potential bounce level. And then I have one base support at 393.65. These are the 4 levels I'm going to be watching pretty hard today. Overall, guys, I think that we will be bouncing throughout this range, and I think we will test closer towards 400 today. Back to you, Hondo.
All right, thank you, sir. Over to Ramsey for Bet the Bell. What do you got for us, Ramsey?
Got a big day today, but
It looked like
Jesus. Let's go.
Sick.
Listen, man, I don't know who this guy thinks he is. We're gonna have
The Tiger King. The Tiger King.
He gets on and he starts shitting on Mo Mamba's outfit. I had to change to go a little bit more casual. Stick with my man Mo. No one goes after Mo without getting a little shit from the Ramsey. So
move on. Get to your segment, please.
Look, man, we're ready to go today. I got a couple of questions for the team. Bet the Bell. This is everyone's favorite segment. So First and foremost, green or red today. Yesterday morning, CPI comes in lower than expected at 7.7 versus 7.9 expected and down from 8.2 previously. Inflation still up nearly 300% from the Fed target rate of 2%. We rally 100 points intraday and over 200 points from where we closed on Wednesday. Reclaimed and blasted through that 3,900 level. We're trending upwards in the pre-market, climbing higher. So, with that being said, green or red today? Let's start with you, Mo.
I think, honestly, man, I think they're going to continue to squeeze the bears. I think we close green today. I think we come down that 395 and bounce off of it for a gap fill reversal. Yeah.
Beautiful. Snipes.
I think personally we're going to test closer towards that 400 level. I think that the buyers will continue to step in, considering that we do have that positive CPI report from yesterday still.
Dipka.
You look like Khabib, dude. And I'll say green. Green. You go to the fights this weekend?
Yeah, I will. I will be at MSG for the fights wearing this exact outfit. Look for me on
fucking
TV.
go. Tell them.
Yeah, I will tell. Alejandro's freaking out right now. Hondo, what do you think? Green
I'm
or
not
red?
freaking out, dude. All right, I'm not gonna lie. I have pretty strong bullish bias coming into today. For better or for worse. I think we're gonna close green. But I wouldn't be.
I might switch up. I don't want to be on the same side as this guy.
I mean, also everybody has said green so far, so that kind of makes me think we're fucked.
Diamond.
I think I want to be
Diamond and then
I want to be red just because Hondo's green now.
Yeah, I love to play devil's advocate, but I gotta say green here, just with the way that we traded yesterday. I think this catalyst pushes us forward.
Somebody's gonna run this back on Twitter. They're gonna clip this. And be like, look at all the.
I'm 0 for 5. I'm
green.
0 for 5 following the pre-market futures, so they're green right now. I gotta switch up my narrative here. I'm going red.
I love it.
Respectable.
I love it. I love it. All right, next question. Big one. NVIDIA up nearly 50% off of yearly lows. We filled that big 150 gap fill resistance on the daily yesterday. I will say Meta, we were looking at this back when Meta released earnings. They had a horrible earnings, but NVIDIA was just ripping. So on their Q3 earnings release, Meta, they announced that they had an increase in AI capacity, which is driving all of its CapEx growth in 2023 substantially. And earlier this year, NVIDIA laid out a vision to transform data centers into AI factories using powerful hardware. And in its most recent quarter, that data revenue was up 61% year over year, about $3.81 billion. Stocks ripped another 25 to 30 points since that news came out in late October. So with that being said, is the bottom in on NVIDIA? I'll start with Dipka. I think I know his answer.
This is a tough one for me. You'll see why in a second when we go to my segment. I think the bottom may be in across the board, but NVIDIA and AMD are particularly two that I'm concerned about with all the China news pending. I don't think that we're out of the woods with that stuff yet. So I'll go with bottoms not in on NVIDIA.
Gotcha. Mambo.
All right, Coach, did you say you think the bottom is in across the board or is not in?
We'll talk in the next segment.
All right. No, I do not think the bottom is in on the video. Simple as that, yeah.
Snipe.
I agree with Mo. I think we're not at the bottom yet from the video.
Mander.
I think there's certain names where the bottom may be in, and the video is not one of them yet.
Hondo and then Noah.
Bottom's in, rip it.
Noah.
I'm gonna say bottom's not in, but I honestly don't care. This is a top 5 company that I would want to own for the next 10 years, so I'll buy it wherever.
Gotcha. All right, cool. And that brings us to our last question. For those of you that are in the Discord listening to Live Voice, you guys know how Coach Dipka loves saying higher lows with respect to the trend. Higher lows, higher highs, lower lows. So with that being said, we got a line today. 4.5 higher lows for Coach Dipka. Will he say it more or less than 5 times? Over or under 4.5? Noah, what do we think?
That's an easy over. We had a trend day yesterday with higher lows the entire day. If we don't get a trend day today and we chop around, he's going to reference yesterday at least 7 times. So that over is I'm smashing that over. Easy bet.
Mambo.
Man, he's been slacking on that, honestly. I'm going to go with the under. He's been slacking on that recently. Yeah, so I'm going to go with the under.
Snipe.
I'm full port on the over.
Porting on the over. Mander.
Yeah, I'm going to wages for an alternate line. I'm going to take the over before noon.
Wow. That's like plus
We're gonna
300.
get this at like plus 400.
Yeah,
Dude, I got. Look at the comments. They're all smashing the over too.
they're smashing the
They
over.
know you. They know
that's
you.
great. Dwayne,
Listen, I
That's
don't
an
know.
over. That's an easy over. Easy over.
what do you think, Coach?
All right, let me pitch this. How many times is Dwayne going to say the word the system?
That's not part of the equation here. That's not the question. That's
I
for a
don't know.
different
I'm
show.
thinking- I mean, if I'm in control, I'll probably say the under based on recent action. But with it's more common when the market is bullish because those higher lows are so apparent. You can't fade them, right? If you look at the chart yesterday, we had 3 higher lows clear cut. And what did that lead to? What did I say was going to happen? Melt up to 395 in the close. You don't fuck with the higher
Somebody
lows.
stop him.
You do
Somebody
not fuck with
stop
the higher
him.
lows. That's
This
all I'm
isn't
saying.
part of the segment.
Fade the trend when you
What
step
is
in
it?
front of the train
And
and
this
you
was
get
a bell.
squeezed. You're asking for it. You're asking for it.
He almost broke through our line in about 35 seconds. So shit, we might have to change it. Yeah, I'm taking the over. That does it for Bet the Bell. Thank you guys, Hondo. Take it over.
All right. Awesome stuff there, Ramsey. Let's go over to Coach now for Coach's Corner.
All right. Thank you, Alejandro. Guys, thank you. It's time, though, for Coach's Corner. This is I want to bring in the best. I want to bring in the best of the best. There's no one more well-versed in macros. So let's bring in Money Mander. Okay. I was thinking about diamond trades here too, but Money Mander and I have had a little bit of a clash in the past. So I want to bring Money Mander in and ask the question, right, that I hinted at before. Is the bottom in? Is the bottom in on the overall market here for the next couple of years? Or will retail be left with yet another graveyard of bags? We'll start with you, Mander. Obviously, we had a 5% move higher on SPY yesterday. A violent squeeze, right? And I think it was the biggest move on SPY in 2.5 years or so. You can fact check that, but pretty crazy. So what do you think? Is the bottom in right now? We'll start with you.
It's going to make for a great replay again in a few months. And first, I want to thank you because my alternate spread just went to a minus 100 cash out. But bottom's not in. Bottom's not in. Let me go back to the same analogy, right? Say the Sixers pick me up for tonight's game, and I go 0 for 10 in the first half, and then 1 for 12 in the second half. Is 1 for 12 good just because it's better than more bad? No. So yeah, interest rates are coming down. They're still up. Inflation's still up. These companies are still going to feel these pressures of less demand on their earnings coming next quarter. EPS.
Let me jump in here and just ask you what's going to bring us down then, right? Because we saw record high inflation, right? We saw war in Europe, and this couldn't bring the market down while Fed was raising. So what is going to be that catalyst? Do you think that's somebody needs to blow up essentially? I mean.
That's what I mean. We haven't seen any legitimate pain yet. No companies, not even these insane high growth companies that are leveraged at like a 25 debt to asset. Not even a single company has gone under yet. So we're not even close. Eventually, they're going to feel this, right? Every company just hinted at terrible revenues next quarter. Eventually, we're going to get to the point. These things take time. It's a cycle. It's not 6 months of, oh, inflation's high, but my groceries are expensive. Then all of a sudden we're back doubling the stock market like we did in 2021. We're still so extended. And I'll reference my tweet where I showed where the bottom fell in on the past two recessions, 01 and 08. We fell 40% below that weekly 50 SMA. We haven't even cracked it yet. That is just how extended. We're down like 20 some percent on the Qs this year, if not more. And we haven't even cracked that weekly 50 SMA. Stocks got out of control. We printed money like never seen before for a whole decade. Things have to come back to parity.
Well, here's what I'll say. I don't foresee it in the coming months because the seasonality trade, whether you believe it or not, you can't argue with what we've seen so far. Sell in May, go away. What do we see? Selling in May. What did we see in July? The classic July rally of a bear market, right? What did we see in September? The worst month for the S&P year over year. We saw that again this September. What do they say about October? 2 things, right? The bear market crash and the bear market killer. It's known for both. We saw both. We saw a dip down to 348, and then we saw it killed that very same day, right? So you can't argue with the seasonality trade. And December Santa rally is a real thing, right? Whether you want to believe it or not, it's a real thing that we've seen, and the market's been following this seasonality path in the past. We're coming up onto some of the best months for the markets, historically speaking, right? So on that alone, I'm just going to play with the theme that's been working here and say the coming months, the bottom's in for at least give me 4 or 5 months. You want to talk, 2023, later into 2023, maybe, but I think we're in for a real big bear market rally. Do I think we just go straight to 430 from here? No. If you go up too quick, too fast, that is dangerous. A slow, steady rally would be the best thing for bulls here. I will also leave you guys with this, right? What just happened? The number one fade indicator. Green lights or red lights should have been going off. Buzzer should have been going off in our head. Jim Cramer said last week, do not buy the dip in tech stocks. And that motherfucker Puru just flipped short. Yes, he just flipped short like a week ago. He had been the biggest bull for so long. He just flipped short. He got squeezed to oblivion, I'd imagine. I mean, it's just those two indicators are just giving me all I need to know right there. And we've seen the results speak for themselves so far. Will that continue is the question. I'm going with yes. I'm saying the bottom is in for 2022, and I'm going to give it.
That wasn't the question.
Timeline. What's up?
You can't flip here. That wasn't the question.
The bottom is fucking in, Mander. That's it. There's the answer. That's what I'm going
You're
with.
the guy in 01 buying AOL at $100 right now.
You can roll this here. Roll this clip, and this will be.
You're buying Yahoo at 300.
This will be clipped, right? So we can come back.
Yeah, it'll be clipped.
I'll be on blast if this comes back to bite.
Spy's gonna be at 480. Mander's still gonna be with his hand in his pants and no idea what the hell happened.
Listen, who dripped some in at 360? Me and Alejandro. Who was sitting there with their hands?
Yeah, we did buy some at 360.
Money Mander.
We did buy some at 360, albeit not a lot. It was kind of a scared buy, but we're there.
I will say we were all
Mander
against their meta long too, and then Jim Cramer cried on TV, and now it's up 20%.
Dude, I'm not kidding you. I watched this clip. So it was Cramer. He was saying buy at 300, buy at 200, buy at 100, or buy at 150. And then there was that clip of him like crying on CNBC. And I was like, hold on. Like, I might have to buy a little bit here. Because he was like, I was wrong. He gave up on the stock. I was like, all right, time for me to buy a little bit. Up, 11% on the trade? Not bad. All right.
Listen, Money Mander, good debate. We'll see what happens. The tape doesn't lie, right? So we'll see. The chart doesn't lie. We'll tell in 6 months or so. I'm sure some of these people will let me know it if I'm wrong, but I'm feeling pretty strong about this. So thanks for joining Coach's Corner. We'll pass it back to Alejandro here.
All right, guys, let's go over to Mo again. He's going to give us the unusual catch of the day.
There we go. Okay. Unusual wells, guys. I fucking love the flow. Wait. Before I get started with this, you guys heard Coach. He tried sneaking in that 2022, but Sal caught it. So we got a month and a half left, brother, in 2022. But hey, yeah, the bottom is probably in this year, but not completely. Let's see though. All right, back to the flow here. I love the fucking flow. We've been smacking trades. We have a pretty good win rate with the flow too. Past few weeks have probably had 1 or 2 losses, over like 10 winning trades on it. So this was yesterday. Spy, the flow in the morning was out of control. It was hard to get direction, along with the price action on the chart, right? So let's jump here real quick. This was the big thing. You remember this daily supply we spoke about earlier? What was once daily supply? This 390 to 388.5. So we were coming up here into this 390 level. This was a level I gave out on FinTwit as well. 390 big level, the peak of the daily supply. Now I was eyeing the flow as well. Guess what we got? Starting at 901. So I'm central, guys. Starting at 901. I have my premium at 100K plus. You're getting 200 plus put flows coming in for 1 DTE. So what the put flow is telling me, a nice rejection, get a nice put scalp down to at least 388.52, the lower level of that daily supply, right? Or my 9. So you can see the massive put flow that came in for 1 DTEs right at 9. And it kept coming in all the way up until 907. So for 6 minutes, you got, I mean, I probably continue to up here, just this one call flow, but they were getting smacked, right? Now let's go back to this. Again, I'm central. This is 9 o'clock right here. This is exactly 9 o'clock. So at 9 o'clock, they were smacking puts. What I wanted to see, I don't just watch the flow, jump in puts. No, that's not it. I wanted to see a test of this 390 level and a close below. We got a nice wick above and close below. I ended up grabbing puts. These puts ended up running 40%. We were able to get 20% on those. My target was this lower level of the daily supply, or if it came down to my 9. And we were also gapped away from the 9. So that was a second target because we were so far away. But this would be my first target. You can see the rejection here, and then a nice move once we blew through that level. So 388.5, we finally hit that target. This was a nice scalp. That was the only trade on the put on the flow yesterday. All right. So unusual wells, Mr. Well, thank you.
All right, thanks, Mo. Now for our final segment here, guys, we're going to do today's top watches. We're going to go ahead and ask the head traders what they are taking a look at going into today, starting with Coach.
Yeah, let's bring up the chart for today's daily watch. First of all, I want to show this to Money Mander and Mo Mamba. We got a beautiful, beautiful head and shoulders on the daily chart. And guess what else we have? We have a fucking higher low, I'll say it. We have a higher low and a higher high there. What is that? That's a bullish uptrend. We have room to 410 by my chart, at least. Room to 410. How fast we get there, who knows? You know, we obviously might need a little pullback or something, retest and hold that 390 for confirmation would be best. Well, let's roll over to the daily levels again and look at my top watch, right? Since the bottom is in by my measures, we got to look for where is the right place today to buy the fucking dip, because we're holding 392.51 is my favorite candidate in 392. So my top watch is going to be calls off of 392 to 392.51 with a stop under 391.68. So I'm risking about $1 there. Sounds like a pretty good risk reward, 10 points on ES. You could even probably risk like 90. That first fib is where I'll probably take a half starter, and then I'll take more at 392, stop under 391.68 with a candle close there. So yeah, risking $1 for the upside of, you know, $4 or $5 probably. Look for 395 target there. That's it for me. I'll pass it back to you guys. Thank you.
Thank you, Coach. Noah, what are you looking at?
Top watch today is going to be AMD. So AMD has a massive supply zone right here below the $70 level. Also a pretty big volume shelf and filled the gap yesterday. A pretty massive gap from back in October. AMD was one of the strongest names yesterday, right? Really no pullbacks, a ton of call flow. And stock closed today up around 14%. So it'll be interesting to see if they can clear this demand zone, break this $70 level. I think that either way, we can get a really large move. If they do want to break and confirm 70 as a support, we can see a push up to 74. And if we do want to reject this supply zone up at 70, we could see a retracement of the move from yesterday.
All right, so we had XOM up on the screen, but the top watch was AMD. So make sure you guys take a note of that. Over to Mander.
All right, Ryan, thank you. I got, there we go. I'm watching Amazon today. Listen, I'll say Coach loves his Joe Schmo candle fakeouts. Joe Schmo is the one adding to their 401k right now. But I am watching Amazon for upside as the rally lives on. I think Amazon off that head and shoulders break to the downside sees a rally at least back to previous year-to-date lows, if not back up to that trend line support on the head and shoulders turn resistance. So I like this over 100, maybe up to 105.
Pretty bullish for a perma bear.
We trade both sides here.
Perma bear. All right, Mo.
What's up, my man? So no one chirped me. No one chirped me. I don't trade this. No. So it's AMC. It's not Snow. It's AMC. Yeah, there we go. All right. I don't trade this name usually, and I shit on this name a lot. So no one chirped me about this. I did not set any targets. This is a meme ticker. If this runs, this runs. I can't say any target. It might or might not respect the levels, right? So, but it formed clean levels. You got a double bottom intraday and then a double top, 625, 590. We'll play both directions. Let's see the breakout where we get this breakout at, and we'll go ahead and trade this name.
All right, Ramsey.
Mo the ape.
He is an ape.
Ape.
All right, my top watch today is Google. I'm looking for a hold of 94.4, previous low a year, now flipped to resistance. It looks like we're going to open up right above or just at that level. So if we can hold and bounce, I'll look to go long, targeting 96.5 and 98 gap fill entry as some short-term upside targets. And contrary, if we break hook and go to the downside off 94.4, I'll target 92 as a short-term downside target. That's my top.
Ramsey, I really like that, dude. Disney, if you saw, previous year-to-date low was a beautiful level. Despite the rally, Disney still got stuff there. So those previous year-to-date lows are good levels, man. If you guys are listening, I would keep note of those on the daily.
Right. We tend to see that quite often, especially in the Qs. We saw it earlier this week. What was it, 269, like 30 around there. Yeah, definitely we'll have those two names on watch.
Okay, over to Snipes.
What's up, guys? So as you guys know, I normally trade SPY day to day, intraday trades, and I like to scalp SPY. But one of my top watches today is I'm watching that 393.65 level. Now, I'm looking for a bounce off this level, and I'm basing this when we're looking at last September. We can find multiple bounces off of this 393.6 level. Overall, I'm looking for a bounce off of this 393.65 level to come towards close to testing 400. And that's my top watch today.
All right, guys, and that's going to do it for the first episode of Beat the Bell. We are about 20 points off of the pre-market highs here. Things are about to get interesting. I imagine that this is going to be another hectic session. Ready to get into it. Hope you guys enjoyed the show. We'll be going live Mondays, Wednesdays, and Fridays at 8:30 a.m. Eastern time. So you'll be seeing us on Twitter, YouTube, and Twitch. Again, thank you for joining us. Thank you for supporting, and we hope that the show provided value. Good luck trading Good luck trading today, everybody. Remember, manage risk first, and let's get after it. Have a good one, everyone.